they didn't focus on the Alex Machinskys or the Sam Bankman, frauds of the world who are out there promising unrealistic returns that would be indicative of like a Ponzi kind of scheme.
We have with us the infamous John Deaton, who has been very active in the XRP Ripple lawsuit, and anybody in the XRP community knows what a fabulous hero he's been. And we're going to take some time today to kind of dissect what happened with this XRP case. What does this tell us about what the SEC is doing, and just kind of tease out some of the ramifications on this. I hope you enjoy this show, and it's going to be a real good one. Where do we stand now? I mean, because there's obviously both sides kind of disagree with the split decision, and there's obviously a chance to appeal. There's also a window that actually there may be a trial, I understand. What lies ahead? Hello, everyone. Thank you for joining the Clinton Donnelly Show. I have with us today John Deaton. John, thank you for joining the Clinton Donnelly Show.
Thank you, Clint, for having me. I appreciate it.
So, John, tell me a little bit about yourself.
Okay. Myself, I'm a lawyer, live in Rhode Island. I'm from Detroit. Was 8 years in the Marine Corps. I was a lawyer in the Marine Corps, trial lawyer. I've spent most of my career outside of the Marine Corps, where I was a federal prosecutor and defense attorney representing people who contract a rare form of cancer called mesothelioma. I'm sure your audience have seen commercials about mesothelioma. It's only caused by asbestos. I represent those hardworking people who unfortunately all die from it. And that's pretty much what I've done until December 22nd, 2020, when the Ripple lawsuit was filed. I kind of accidentally got into this thing called securities law involving crypto, and that's where I am today.
So you really knew nothing about securities law before the Ripple case started, but
never heard of Howey. I had never heard of Howey.
You're a pitbull. You just went after that section of the law. You just dug in. I mean, you became a commanding force in the entire effort.
Well, listen, I mean, there's so much hype given about someone. I mean, there are certain areas like tax law. Now, there are certain areas of the law that I say, hey, you got to stay away from that unless you really are experienced. And taxes would be one of those areas. But when you're talking about reading a Supreme Court case like Howey and applying this test to the facts of the case, I mean, any lawyer could do it. You could do it. I could do it. And so it didn't take a genius, Clint, to figure out that the SEC was attempting to do something that it had never done before. It was extending this Howey case into the secondary markets, and encroaching on people's property rights and their right to engage in asset transactions. People who had no idea of a company called Ripple, people who had never heard of Brad Garlinghouse, yet the SEC was saying, oh, you're in a common enterprise with Brad Garlinghouse and Ripple, even though you've never heard of them and weren't buying XRP because of them. And so it didn't take, you don't have to be a securities lawyer to read it and say, whoa, this is crazy. And so that's how I got involved.
That's incredible. Hey, before we started, you were telling me a little story about your adventure dealing with the IRS.
Well, listen, brother, you are a better man than I am. I will tell you that because I've only had one real experience with the IRS. In 2012, I got a notice that I was getting audited for 2009, and I was like, shit, I've never been audited. And I call my accountant. I'm like, let's meet him right away. I called the agent and I said, well, listen, I can meet you tomorrow. I just, let's get this going. And she was like, well, no one's ever been this enthusiastic. I said, listen, I'm not enthusiastic. Here's the thing. I pay my taxes. If I owe you money because I took a deduction that I'm allowed to or something, I'll pay it. If I overpaid, I want my money back, right? But let's get this over with. So she meets me and it's March. And she says, can we make a commitment that this audit will be over by this year? she said by the end of November. And I look at her and I go, are you crazy? Why would this? I'm a simple operation. I got like 8 employees. I said, why would this take 8 months of my life up? And then they extended it into 2010. And then they were coming in. And Clint, when you open a law firm, I just went on my own. You're sort of like on the job training. And I made mistakes that someone like you would be like, oh my God, John. And the mistakes I made were simple things like I didn't make copies of every deposit I got, like the actual check that came in, and scan it in so that when the IRS agent said, hey, this $12,000 deposit, I want to see the source of it, the checks. I didn't save all that. So I had to go to the bank and ask for them to give me the copies of the deposits. And it just ran. When it was all said and done, I ended up overpaying by 30 grand one year and underpaying by 10 another year. So I ended up getting like 16 grand when all was said and done in my favor. But I would have rather donated that to charity and them left me alone for the 9 months. They tied my staff up. And it just made no rhyme or reason. It's the government at work. And so that's the only experience I've had. And, I never want to get audited again, not because I'm hiding anything, but because, the government they're not efficient, I guess is what I'm getting at.
Yeah, it is. Well, I mean, welcome to my world. I mean, you should have become a tax lawyer after that. It is a drama. I mean, and with tax, when someone gets audited, you're just stressed out about everything. Why are they asking this? You don't know why. What are they going to look for? What didn't I do right? This tension, especially I defend people who are crypto investors. So I had one couple who IRS started an audit in 2017, went to 18 and 19, 3 years. And these guys were a gamer, about 100,000 transactions a year. Wow. So, he stayed at home while the wife went to work at a hospital. And he stayed at home. He was a professional gamer. Like he would buy a magic sword for $40,000, and he'd sell it for $45,000, and that's how he made his money, right? Magic swords. But the audit, just every month, the slowness at which the IRS progresses.
Yeah.
The fear and the terror and not knowing how much they're going to come after you for. And then it's, the conversation, the wife saying, I told you not to do that. Why would you do that crypto stuff? And it just, at the dinner table at night when you're laying in bed, the tension, they couldn't wait to get out of it. Finally, we got to a point where like the deadline, because there's a statute of limitations, the deadline was coming up. And the woman goes, all right, she wanted to analyze everything. And she came up with one transaction. We couldn't quite trace the source of that, but we'd already aggressively recalculated other things. So that mixed together, the guy had to pay. They wanted $3,000 for 2017, just 17. He agreed to pay that, and then the other 2 years remained open on the statute of limitations. Turns out this auditor was looking to transfer to another, getting promoted out, which probably couldn't wait to have happen soon enough. So she wrapped up the other 2 audits. Like, no change. We're happy. We're done. Wash our hands. So we got out of it with 3,000. I told him we could have fought it, but but the thing is, the fear, the terror, the mounting costs, and all that stuff.
Well, it's not
scary.
But it's not just that. It's a certain level of competency too, because she ended up sending me a letter that it was unbelievable. The first thing I said to her is, I said, listen, have you ever audited a plaintiff's attorney where I'm not a billable guy? I don't have billables to show you here, on this case. I front the cost, and if I settle it, I make a third of the settlement. And I said, have you done that kind of lawyer? Because it's different. And she said, oh yeah, of course I have, blah, blah, blah. So when it's all said and done, I said, because 2/3 of the money that comes in isn't mine, right? So if I do a settlement for 90,000, they're going to 1099 the Deaton law firm 90,000, but 60,000 is the client money, and 30,000 is gross revenue for the Deaton law firm. And so she explained it. So then she ends up, after her magic or whatever, 6 months later, they tell me I owe $1 million, and I go, and it's in writing. And I call my accountant, and of course I'm stressed out, and I'm like cussing through the phone, like, what the F is going on? And because it was money in my IOTA account for clients that I had to hold back to pay Medicare liens, Blue Cross Blue Shield liens, and Medicare is the federal government, and the federal government passed a law called the Medicare Secondary Payee Act. If I don't hold money back to pay a Medicare lien out of the settlement, they can fine me $1,000 a day for every day I'm in violation. So they make it punitive. So if Medicare puts a lien of 60 grand on the case, I hold that money back, and I'm negotiating with Medicare, trying to get it down for the client's benefit. But anyways, so I had a bunch of money that I didn't disperse to the client that was in the bank because it's for liens. And she goes, well, that money's there. I go, listen, first of all, it's money I'm holding for the federal government. A. Two, it's client money. It's not even taxable as income for them because it's personal injury. I go, so you're taxing me on money that's not mine. That's, and so it was just fundamental competency. And I explained to her, I've said, remember that first meeting we had? And I tried to explain to you that I'm not a billable attorney, and I'm a plaintiff's attorney, and I front the cause. It just went over her head, and but when I saw that thing come in that said I owed $1.1 million in back taxes, and then the penalties on top of that, I was like, well, I'm just going to close because I'm done. You know what I mean? I'm going to have to hire a guy like you and fight him, which I would have.
I'm laughing. It's so typical.
She relented. We showed her that it wasn't my money and all that, and relented, and they retracted it. But it just, the whole process really hurts a small business. That's all.
It's such a distraction from just trying to grow a business. I mean, they went from you owe us $1 million to they ponied up
16 grand,
20,000, 60, to you. That's a tremendous, turnaround. That's congratulations on that. But the whole journey is stressful. There's almost like no other aspect of our personal lives where we intersect the government more than paying our taxes. Most of the time, it's a one-way street. You're doing sales tax, your income is withheld, your wages, and it's a one-way street. You just never want to hear back from them. And it's a scary, scary thing.
Oh yeah, it's one way. In fact, when they showed me, in 2009, I had underpaid my taxes. It was like about 9 grand, something like that. They disallowed something deduction, I think, or whatever. But in 2010, I overpaid. I had to pay them interest on that 9 grand that I underpaid, but they didn't give me interest on the money I overpaid, right? So it really is a one-way street. You said it perfectly.
Well, I hate to give you this advice, John, but you need a lawyer. Never be your own lawyer. Anyhow, let's talk about XRP.
All right.
I went onto the SEC website, and they have a page that lists all their enforcement actions, really only up to March. And they've done over 200 crypto enforcement actions. And many of them are individuals, basically, who are engaging in what they characterize as some fraud. Everything's about fraud with them, or unregistered securities. But then a lot of them had to do with corporations. Ripple's in there, Coinbase, everybody that they're going after. The SEC is, I say this because I didn't really realize the breadth at which they were going after crypto enforcement. I also saw they had a press release saying they were hiring another additional 20 staffers to that particular department of crypto enforcement. And certainly there is a lot of fraud that needs to be clamped down on, kind of like FTX, which they didn't do. But early on, back in, as you said, in December of 2020, they came after Ripple. And it just shocked the entire market. Everybody was just flabbergasted about this. Now, a lot of people said, well, that's just a Ripple problem. But then as they did more enforcement actions, people realized that this was just the tip of the iceberg of where the SEC was going. And, on the internet, everybody vilifies Gary Gensler. They put Hitler mustaches on him and everything about that. But, he's just one guy, and he's not stupid. He's been a professor and in this field. I heard just recently on another podcast that he was actually Hillary Clinton's campaign finance manager when she was running for president. I mean, this guy is connected. He knows his stuff. And yet this lawsuit began. Can you summarize the XRP case and where we are right now?
Yeah, well, the thing about it is, and I would be the first to applaud the SEC had they focused their attention not on these good actors who may have violated 1934 disclosures, right? That the Securities Act is of 1934, pre-internet, pre-Google, where people didn't have access to information. And it's all about whether or not the company made a disclosure statement, right, and reduced asymmetry on knowledge. A strict liability case of good actors who just, like me, maybe I underpaid my taxes by a couple grand. Doesn't make me a bad guy. I just, made a mistake. They didn't focus on the Alex Machinskys or the Sam Bankman, frauds of the world who are out there promising unrealistic returns that would be indicative of like a Ponzi kind of scheme. Instead, they focused on, regular actors. You got the library case, you've got the Ripple case. And so a lot of people were shocked, Clint, because XRP was the third largest crypto. It had battled Ethereum for the number 2 spot for years. It had been traded in the United States for 7.5 years. There was a FinCEN settlement in 2015 where they declared it convertible virtual currency. And so they were surprised that because the complaint retroactively said that all XRP sales from the beginning of time until the end of the world. They didn't use it in those exact words, but that's functionally what the complaint said, that all sales of XRP. So when I read the complaint, I was expecting them to do what you normally do. You normally say, this company on this day offered and sold, marketed and packaged an asset that scheme-wise made the investor give money to rely on their efforts as an investment contract under Howey. And it's limited to the transactions by that company. So I was expecting the complaint to be just about Ripple and when Ripple sells XRP. When you get to the first paragraph, number 1, it says XRP is, quote, a digital asset security. So they're like, well, wait a minute. They're calling XRP itself a security. That's a first. That's never been done like that. And then you go and you see that they're talking about future sales, present sales, and past sales. And then when you read the complaint, it was what I said about earlier. It was reaching into the secondary market. So someone who bought XRP who never heard of Ripple, but bought it because they were going to utilize the ledger to transfer money, or the DEX, the decentralized exchange, as part of the XRP ledger. Or maybe they were investing in money and they just said, listen, I'm going to buy Bitcoin, ETH, and XRP, this new asset class, and I'm just going to pick the top 3. That doesn't meet Howey, because you're not relying on the efforts of these promoters. You're not unaware that they even exist in many times. And so that's what made this case so different. And people like me and the XRP community were saying to the rest of the world, hey, you guys are just saying it's about Ripple, but they could extend this to every other crypto asset if you're not careful. And that's in essence what Gensler's, ultimate plan was, because he obviously went against Coinbase and sued Coinbase, saying that multiple tokens are also digital asset securities. And that's the fight we find ourselves in right now. It really is a regulator. Gensler testified when he was confirmed as SEC chair, and he used to be CFTC chairman under Obama, and he was Hillary Clinton's chief financial officer for her campaign in 2016. He wrote the check for the infamous dossier, if you would believe it or not. And so
he's deep state.
yeah. I mean, he's as deep state connected as you're going to get. And so he basically testified that that crypto fell out in this regulatory gap. There was no market regulator for it. It was outside the SEC and the CFTC. And then he turns around and, of course, says, no, everything but Bitcoin's a security. And so, you have a regulator who has this new asset class, and he wants to get jurisdiction over the entire thing. And that's where we're at now.
So it was a lot of drama going back and forth, and both sides requested summary judgment, which means that there's no need to have an official trial. They felt that there was no real debated material facts, and they felt that there was enough information that they all agreed on, that the judge should be able to make a decision without having a trial, which the judge took a long time to do. I remember at the conference, she said the judge will not go past August, because otherwise you'd have to explain to Congress. And of course, in July, a month before, she comes out with that opinion. And the opinion was kind of a split decision. That relative to institutional investors, she agreed with the SEC that offers had been made and that it was being treated as an unregistered security. But for the individual investor, people buying on secondary markets through Coinbase and these sorts of exchanges, that was not a promotion of an unregistered security. So the SEC lost, Ripple won. Same thing for the people they directly paid. And I guess Ripple won just about everything else after that. Where do we stand now? I mean, because there's obviously both sides kind of disagree with the split decision, and there's obviously a chance to appeal, and there's also a window that actually there may be a trial. I understand for some matters. Tell me what lies ahead.
All right. Well, basically, the judge did what you said. The SEC classified basically three types of sales: institutional sales, programmatic sales on exchanges, and then these distributions to independent contractors or employees where they gave XRP. And the judge simply applied the Howey test to each one of those types of sales and found what you said. Institutional sales, she said, there's underlying contracts. They were holding it. Sometimes a cold storage. They're waiting for maybe Ripple to help improve the ecosystem. That's a contract. Programmatic sales, we don't know who the buyer is or the seller. You can't rely on the efforts of someone that you don't even know is selling it to you. That kind of scenario, she said, that's not a security, and neither is there's no one invested money, so you don't even meet the first prong of Howey on the XRP giveaways, if you will. And so Ripple disagrees with the decision on one area, and that would be their ODL platform. Because their ODL platform, the person buying XRP, the institution, they're only holding it for a few seconds to transfer, from one fiat to another as a bridge currency. And they were going to attack that issue during the remedies section, which would be the next, not the trial, but they were going to go to the judge, because the judge has to figure out what's the appropriate penalty Ripple should pay. And Ripple was going to say, hey, judge, let's distinguish ODL. But the SEC decided that they were going to ask for an interlocutory appeal. And your audience, all it needs to know about that is means early appeal. Usually an appeal is after all jury trials are over, all summary judgments are over, the judge rules, there's nothing left to litigate, and it goes up to the higher court. An interlocutory early appeal means when one party says, even though we're not completely done, we think the appellate court should rule because, judge, you got it wrong. And the SEC says that her decision on the other two categories that Ripple won are wrong. The judge has to agree. No party has a right to an interlocutory appeal. You have to ask two people. You have to ask the judge permission. And then if the judge, Torres, says, yes, SEC, I'll let you ask the Second Circuit whether to grant it, that's what would happen. If Judge Torres says no, they don't get to go up for an early appeal. If Judge Torres says, I'm going to allow you to ask the Second Circuit whether they want to hear it early, you can. And what I believe is going to happen is that she's going to deny it. Ripple's objecting. They're saying, this early appeal makes no sense because we still have these other issues, the trial of the two executives to go through, and there's no reason that we should do an early appeal because it doesn't meet the standard, which we don't need to get into. I believe I'm very confident. I could always be wrong, but I'm very confident that she's going to deny the interlocutory appeal, and then we're going to have her ruling moving forward for the next couple years. And there is a chance that crypto, and I can tell you now, there's a chance that the Coinbase motion to dismiss before Judge Faya, who is also in the same Southern District as Torres, that could be the biggest win for crypto moving forward. I'm not saying it's going to happen. I'm just saying it's possible where the judge says that blind bid asks of digital assets on an exchange where the buyer doesn't know who the seller is, as a matter of law, the Howey test is inapplicable to that type of transaction. She could say that the staking part of the Coinbase case can go forward, but she's dismissing the case because the SEC doesn't have jurisdiction over secondary market sales of digital assets. That could be the biggest decision we get in crypto right after the Ripple case.
This is such a fascinating question. Now, what's the time frame on Judge Torres making her decision on the interlocutory?
By the end of the year, I would say,
Okay.
is the best I could say. I don't think she'll go into January. I mean, it could come out in the next couple of weeks. It's due really, I would say she's going to take her time. You're at least looking at like 60 days. And so we're at least looking at another month, but I'm comfortable saying by the end of the year, just to be safe.
Well, I do know that when the judge came out with this ruling, I think most people didn't understand what was going to happen, what the judge would think. And this is really, the SEC has been engaging in regulation by enforcement, is what most people have called it. That is, that there are no clear regulations about the treatment of digital assets from the SEC point of view, and they're just basically taking the existing rules, as you said, from 1934, and applying them as though, trying to make it fit, almost like a square hole in a round peg type of thing, and throwing it back to the courts. Some people would say, SEC has been waiting for Congress to give guidance in this space. But if you think about the securities case, the law, which was passed in 1934, the financial collapse happened back in 1929. There should have been laws passed in 1930 or 31. Why are we waiting for a whole nother president to come in place, Roosevelt, to have a 1934 ruling? I mean, I guess the hands of Congress move very slow, but this court case has been out there for 3 years. Cryptos have been in the marketplace for, well, in a significant way, almost 10 years. So it is shocking, I think, how that they've had to resort to this, forcing the courts to rule in this way.
Yeah, I mean, listen, there's no doubt we can all agree that Congress should do its job and should lay out regulatory rules, regulatory guidance for crypto, designate, is it the CFTC that is going to oversee crypto assets? Does the SEC only have jurisdiction over initial coin offerings where the technology is not yet built? That meets sort of the Howey test, right? You just hold the money, then you build the technology, and everyone's waiting and relying on you. But everything else goes to the CFTC. But let's just be honest. We're going into an election year. There's never going to be something that is going to pass the House, the Senate, and be signed by the president. Elizabeth Warren chose to go anti-crypto as part of her campaign for re-election in the U.S. Senate, and she's on the banking committee in the Senate. She is, for sure, the most influential senator in banking, and she's friends with Gary Gensler, and they chose to go down that road. So we're stuck with these court decisions. The only good news is, as long as it's taking, that's the downside, but the system's working, meaning that the courts are putting the SEC into check, right? We've got every court so far that has reviewed the SEC has slammed it as being unreasonable. You know, we got a grayscale ruling that came out not too long ago where the appellate court said the SEC was arbitrary and capricious in their denial of a spot Bitcoin ETF. You got the Ripple decision. You've got other judges in the Voyager bankruptcy and taking the SEC to task. Judge Netburn in the Ripple case called the SEC hypocrites and said they lack faithful allegiance to the law. I mean, that's just powerful stuff from judges who are holding this branch, who is an unelected bureaucracy, you know, out of control. And so hopefully we'll continue to get more victories in court.
So if a new president gets elected, let's say, you know, non-democratic, does he have the power to replace the SEC chairman, or is that more of an appointment later on?
Well, the SEC is historically what happens is that yes, he can pick an SEC chair, but you know, that's a great question. I don't want to misspeak because I'm not a procedure guy on the SEC, and because my memory serves me, the SEC is supposed to be independent. I don't think the president can necessarily fire, but can designate who's chair. You know what I mean? I don't know if you can get someone immediately replaced if their term hasn't expired. But generally, what happens
Gensler is one of the commissioners. He happens to be the chair of the commissioners. Is that the deal?
Okay. He's one of five, and Hester Peirce, for example, corrected Tony from Thinking Crypto when he just sort of tongue-in-cheek said, you know, Gary Gensler, you know, I know he's your boss. And she goes, hold, no, he's not. He's chair, and he gets to dictate the agenda and all of that, but he's just one other commissioner like me. You know what I mean? So
interesting.
Yes.
Hey, I thought one of the interesting dramas that was happening amongst many on the Ripple case, John, was the whole thing about the Hinman documents. What was the issue? What was the drama? There was a release of some redacted documents, and what do you think those documents? What effect do you think that had on the final decision?
Well, Hinman was director of corporation finance, and Jay Clayton, his friend, was the chairman of the SEC. Just on a
okay, thank you.
No, that's fine. The bottom line is he had a lot of power because the director of corporation finance, they decide IPOs, they give the regulatory guidance and all that. So a very, very powerful person. I would say the second most powerful person after the SEC chair. Well, he was director of corporation finance, and you know, your audience and everybody's familiar with when you ask Hester Peirce or Gary Gensler or anyone else, Jay Clayton when he was chair, hey, what about Ethereum? What about XRP? What about this? They always say, we're not going to talk about specific tokens or specific projects. You always hear that. Gensler refused to answer the question about Ethereum and said, I'm not going to talk about specific tokens. But on June 14th, 2018, Bill Hinman got up and he gave a big speech where he declared that Bitcoin, but not just Bitcoin, Ethereum was not a security, and that sales of Ethereum, regardless of what it might have been when it started, he said, his quote was, setting aside the fundraising that accompanied the ICO, modern day sales and transactions of Ethereum are not securities. That was huge news. And then he went on CNBC and he said, we at the SEC believe that Ethereum is not a security and blah, blah, blah. And so that just gave Ethereum regulatory clarity. In fact, 2 months after that speech, Brad Garlinghouse and David Schwartz, the CTO of Ripple, had a meeting with Clayton and Hinman, and Brad Garlinghouse spoke up frustrated and said, Ripple's living in purgatory. you guys gave Bitcoin and ETH a pass. You know, what are you going to say about XRP? And they didn't say anything. They didn't say it's a security. They just said, hey, tell us more about your business, right? Because you know what happened after that. And so, and then we learned because the SEC took the position that Hinman wasn't speaking for the SEC, he was just speaking for himself. Now, what it turned out is that he had ties to the Ethereum uh, foundation and the Ethereum ecosystem. His law firm, Simpson Thacher, was a member of the Enterprise Ethereum Alliance, which only exclusively promotes Ethereum. And they were paying him as an ongoing profit sharing partner, not as a retiree. So he made $15 million while at the SEC from his law firm that's a member of the Enterprise Ethereum Alliance, where he gives Ethereum a pass. And there's all kinds of other conflicts. And so because the SEC took the position that it was his personal opinion, the judge said, fine, then all the emails and the drafts of that speech are fair game to be discovered by Ripple. You have to turn it over. And that was litigated for 2 years. And finally it was turned over. And that's when we learned that Hinman called it the Ethereum speech. He had multiple meetings with Joe Lubin at Consensus. He brought in Vitalik to make sure that it was, you know, what he called decentralized enough. And it's been a big controversy ever since, because, you know, even before the lawsuit, someone that's universally respected by the name of Joseph Grunfest, he's a former SEC commissioner. He helped the Ethereum folks out, so he's not biased in any way. He wrote a letter to Clayton and everybody and said, listen, I hear you're going to maybe bring this XRP lawsuit. You shouldn't do that. You're going to destroy billions and billions of dollars of innocent people. And there's no difference between ETH and XRP. You got to treat them the same. And you're showing too much favoritism to, you know, he said these kind of things, and yet they ignored it and filed the lawsuit. And so it's been, that's the drama that you're talking about, you know.
Did those documents showing that there had been bias and a variance of opinions inside, did that really affect the judge's decision?
It didn't affect the judge's decision, but it will affect the trial of Brad Gardenhouse and Chris Larson, because the SEC must attempt, which they can't do, prove that they were reckless in not knowing that XRP was not a security, and not knowing that it is a security, excuse me. And so, but the judge, she did something very simple, and it's a really good decision. It's a sound decision. All she did is apply this simple test to each one of those categories that the SEC claimed were securities. And there was a lot of controversy, Clint, of the securities bar, because she found institutional sales to be securities. And they were like, well, that makes no sense, because those are hedge funds and venture capitalists. They're accredited, sophisticated investors. The Securities Act is supposed to protect the retail unaccredited investor. And you're finding an investment contract for the VCs and not them. And my answer is, well, that's what happens when you apply 1934 securities laws to modern day blockchain technology. You're going to get inconsistent decisions with 1930s policy. And I explained to everyone that the Howey test doesn't have another factor that says what level of sophistication is the investor. It just, does the test apply? And it does, fine. And so that's where Congress needs to step in. And we've seen a lot more Congress people starting, including on the Democratic side, starting after this Ripple decision to say, okay, we really need to do something. You know, hopefully they will.
That'd be good. I know, our firm, we're members of the Chamber of Digital Commerce, and we're very aggressive about making those comments and educating congressmen and senators and that stuff. Uh, what do you think? There's a proposal out there that the accredited investor, which means that you can't buy certain things unless you're an accredited investor. Right now, the limit, I believe, is $2 million of assets. There's a proposal out there to jump that up to $10 million of assets. How do you feel about that?
I think it's outrageous, and I'll tell you why. Today, Clint, I'm an accredited investor. I'm 55 years old. Did not become an accredited investor until I was 45, right? So I served in the Marine Corps for 8 years. I didn't make a lot of money in the Marine Corps. I have a law degree, but I still wasn't an accredited investor because I didn't have enough income or assets. And that's just an insane way to do things. You're favoring, elite people and discriminating against regular people. My brother served 28 years in the Air Force. He's not an accredited investor because he doesn't have enough money, enough assets. He served his country for 30 years. I mean, it's just when you start applying these arbitrary rules and saying, well, this person we're going to put in the sophisticated category and this person the non-sophisticated category, just based on a bank account or based on your W-2s, that's just not a fair system, in my opinion. You know what I mean? And so they got to think of a way to get more people access to assets and capitalism and achieving wealth. We have to expand it, not close it off.
I appreciate that. Now, I want to ask you a question. If you don't want to answer it, that's fine. Sure. But you've obviously thought about this. You've thought about Gary Gensler's behavior. We tend to personalize all these SEC activities as being Gary Gensler, and perhaps he is the head, and he pushes against a lot of people's recommendations, as you have described. When he testified on becoming chairman, he said, he didn't have strong opinions about cryptocurrency. Now he's got strong opinions. Do you think there is an ulterior motive that he is serving in this? That some people call it like Operation Choke Point or some broader, and maybe this is conspiracy theory, but it's really just a speculation at this point. Where do you think this impetus? Is it all flowing straight from him, or is he taking shots from other influencers?
No, I think that, first of all, I think that Choke Point 2.0 with the banks, that was all real. I don't think that's a conspiracy theory. There was an agenda, an anti-crypto agenda set out. And I believe initially it was to kill crypto, right? They view it as a threat to the reserve currency status, or a threat to the dollar. And then they realized that they can't kill it off, and Bitcoin's not going to zero, and crypto, not 20,000 tokens, but crypto, like a handful of projects, whatever you want to say, they're going to be around forever and for good. And so I believe, and this might be a little tinfoil hat, but I said it on Fox Business. I believe they are trying to protect the incumbents as much as possible, crush crypto until the big guys get involved. And now you're seeing the BlackRocks coming in. 5 years ago, Larry Fink of BlackRock said, Bitcoin was a distraction. Now he wants a spot Bitcoin ETF. You have NASDAQ going into custody. And so I think that's what we're seeing. I think we're going to see a major company buy a part of Coinbase, and all of a sudden, Fidelity or a Vanguard or a BlackRock, all of a sudden they own 10% of Coinbase, things like that, where they get a bigger slice of the play. And I think we're witnessing that. There's a lot to be said about they laugh at you, then they try to ignore you, then they get together and say, we're not going to let this happen. Then it starts happening. And they're like, well, shit, now we got to like sue them. And the regulators got to crush them. And then finally they adopt you or buy you. You know what I mean? I think that's what we're witnessing.
That's very interesting. I mean, I think you're right, because that's basically, they're trying to usher in, they're trying to push out this unregulated crypto environment, if I use that phrase, and trying to let the, as you call them, the big guys, the Merrill Lynches, the Vanguards, these guys buy up or dominate the regulated space, which is where a lot of the institutional people would love to buy cryptocurrency, where maybe even your retirement plan, your 401k, you buy into the regulated space. And I think from what we've seen already, there's 4 coins that are already accepted as commodities: Bitcoin, Bitcoin Cash, Ethereum, and Litecoin. And there's maybe a couple others that are maybe not as clear, but they're okay. They're treated as commodities, and there's already a lot of exchanges supporting that. You got Fidelity Investors is heavily set up to support all the other brokerages who want to get into crypto. Franklin Templeton, they were both at consensus, really got to study what they were doing, hiring aggressively. Cboe Digital, which is part of connected with the Chicago Board of Exchange, they're aggressively supporting spot markets on these coins. I'm sure at the right point in time, they'll probably bring more coins into that fold. I would highly expect XRP would move into there, maybe a couple of the other big ones like you mentioned. They all want to trade on these coins because they have longevity and enduring capacity. So, I think that crypto market's going to be even bigger than what we're seeing right now, but it's going to be heavily regulated. It doesn't really meet the renegade feel that we've had with cryptos up until now.
Yeah, there's no doubt. I mean, I think that at this point they want to keep crypto as centralized as possible. And I think that, if there's one area that they really do want to stamp out, it would be as much of the DeFi space that they can get. Because, they're going to impose AML, KYC standards on just about anything and everything they can to try to stamp it out. And the thing about it is, guys like you or me, it's not like we're anti-regulation. We've wanted some form of smart, tailored regulation because it'll help the industry take off. You just don't want what we have right now, which is, government overreach and intrusion in an unclear area of the law, and one regulator trying to do a land grab, if you will, of the asset class. We need some clarity from there, but if we get some smart, tailored legislation that does make basic disclosures, things that we should know, there's some more transparency in the crypto market. That's when we take off, and we reach a different level of what people call the bull market, in my opinion.
I think you're right. I mean, Gensler, by pursuing the enforcement by regulation, basically, abandoned the opportunity to bring leadership to the space and to bring clarity. Like you use clarity, I bring leadership, to help define, the 21st century of how investments are traded. And it
wouldn't be that difficult. You get guys, that are smart, guys like you that can talk about the tax implications and how to treat crypto and all that. But I mean, just think about where we would be if someone said, okay, let's take XRP or Ripple. What do you have a problem with? And someone says, well, we think Ripple owns too much XRP. Okay, so maybe one guidance that we come up with or rule is that no one entity can own more than 30% of the outstanding total. I'm just making this up as I'm going with you, right? But now Ripple might not like that, but hey, that's better than no guidance, right? Where you start putting things out there. This thing called sufficient decentralization. What the hell does that mean, right? And then define it somehow. Does it mean so many nodes, or does it mean so many validators? Is centralization mining, or is it something different? Is it the token concentration? all you just imagine if you said, here are these markers that you have to meet, and everybody out there, um, you got 3 years to meet these markers. If you don't meet these markers, we're going to call you a security. Right? Your token, we're going to treat as security. If you meet these markers, we're going to treat it as a commodity, a digital commodity, and the CFTC be controlled. I mean, we could argue about those markers, right, and have debates, but if there was that, entrepreneurs would have met those guidelines, in my opinion, and we would have, be in a far better place. But instead, unfortunately, we live in a regulatory era where they want it vague and they want it unclear, so that can allow them to pick the winners and the losers and selective enforcement, and just have maximum prosecutorial options available to them, because when it's clear, right? So that's how I look at it.
I think that's great. I think the chokehold, as we just discussed, I think the whole purpose of that really is a delaying tactic, because the legal system is very slow until they can put in the regulations that they want and create an environment that the big guys, as you say, can take over. I think I've always felt that. We in the tax field, we just, you mentioned DeFi. We're submitting a response to the Senate Finance Committee for an RFI that they put out about how to thoughts about a lot of crypto questions. And really, DeFi is one of their most troubling areas. They don't know how to get at it. And part of that is because it's decentralized. There is no head that you can take over. And when we get back to the Financial Action Task Force and all the AML rules, one of the underlying assumptions in these rules is that there's a central point that we can control them, and they will force all the other things to come into bear. Like, we can control the banks. We can control the bank supervisors. We can control the banks. We can control the lawyers, and they have to divulge stuff, AML wise, KYC. But with DeFi, there is nobody to control. Once the code is released, it's released. And if you've done it correctly, you have, updates to that code are decentralized. It's by anonymous people voting their leverage, and there's no person who has a centralized obligation anymore to control that. So DeFi fundamentally undercuts the FATF regulatory rules, or the 40 principles, and just undermines the whole notion that, FATF basically assumes we can control the financial community because we're going to force every country to comply. The countries will force their banks to comply, their lawyers to comply, their accountants to comply. And DeFi basically says you can't force us, and it's a scary thing. Now, my personal, we're coming towards the end of the interview, but but my feeling is we've really seen a massive dump of regulations. We finally got regulations from the IRS. These are regulations dictated by the Infrastructure and Inflation Reduction Act. And these are regulations. That means they're law. All right. So they've posted them. There's a 60-day comment window, which our firm's putting together a response on that. We're also working with the Chamber of Digital Commerce on that. But this is like really the first time we've gotten regulations. And and a lot of what's gotten the publicity on this, John, is the idea that more people are going to have to file 1099, not people, but companies will have to file 1099s. Coinbase will file a 1099. Anybody, maybe even DeFi networks. There's a lot of guesswork out there. Now, a 1099 basically reports income to the IRS. It's like the story you told at the very beginning about your court case settlement. So you'd get a $90,000 payout. Well, there's a 1099 issued on that. It doesn't tell the IRS that you have expenses. It doesn't tell the IRS you have to give $60,000 away, or that there's liens on the remainder of it. It just tells the IRS there's $90,000. So they use that to come up with what they call total positive income on somebody. And we have dealt with a lot of audits because the rules for creating those 1099s up until now have been very conflictory. They don't match tax-paying rules, et cetera. I had one client Coinbase said he had $4 million in 2018 in terms of proceeds. Got the IRS very excited when he didn't report any of it. Turns out he had a $17,000 net loss when we actually calculated it. So these things are very misleading. But the other things that are happening with this law is that it's totally restructuring how we calculate gain. It puts a significant burden back on the individual brokerages. In this case, would be like Coinbase and Kraken to calculate the gain. There's a lot of rules in terms of how you can, which tokens you sell. They have to sell when they sell them. Then we move into a whole nother set of rules that get in. That I mean, basically, it puts a lot of knowledge of who the KYC, AML obligations on people through the tax law. I think the third, now that's going to go into effect probably December or January. I think the third,
This year?
I expect. It depends on how, if it goes into effect December, then it applies to the 2024 tax year. If it goes into effect in January, that is when the regulations become final. If it's in January, then it'll affect the following year, 2025.
Okay.
And fortunately, it's not retroactive. So, but the conversion from how you used to calculate gain to how you're now going to calculate gain is going to be a nightmare for people. I think and we've seen things in these regulations. There's actually they've reserved certain paragraphs as being just reserved. I mean, they haven't filled it in yet. You know, they come out with paragraph H, but there's no paragraph I, and then there's paragraph J. There is something there. So, you know, well, what are you holding out for? I mean, we've talked about this. What's going to go in there? You know, so it's not good. So the other thing I think the third unfolding was Operation Checkpoint. My prediction is going to be coming from FinCEN. FinCEN is the Financial Crime Enforcement Network. It's the financial intelligence unit for the United States. It's basically the gearbox by which all anti-money laundering regulations come to bear. And I believe all they have to do, it's a very simple thing for them to do, is to designate a variety of digital asset platforms or, you know, brokers or money movers or wallets, just designate them as financial institutions, and then they're subject to FBAR and ultimately IRS foreign asset disclosure rules. And when that happens, the financial disclosure rules came into place in 2010. Obama signed the FATCA law, which was the Foreign Account Tax Compliance Act. And this was a very radical law. It forced every bank in the world to send twice a year to the IRS the account balance of every U.S. taxpayer in their banks all over the world. And this was this law resulted in the collapse of Swiss bank secrecy. The Swiss banks are no longer secret. They caved under the pressure, and they disclosed everything. Now, what we would do for the FATCA law is actually an IRS-based law. So you'd be reporting to the IRS on Form 8938 all your foreign accounts. So that would, you know, right? Our company, we always report them, but it's not 100% clear. But like, you have to report your Binance account, your KuCoin accounts. If you're trading on a DeFi platform, what was the maximum value of your assets? Now, this law is kind of, it really just looks at what's the maximum value during the year your assets on that account. And in one level, that's kind of innocuous, but on the other level, failure to report can really set you up for a bad situation for not reporting. You know, if they really want to to you, if they see you didn't report something, they now can switch to, as you know, penalties. You go from a 20% penalty to a 40% penalty. And they can start to hit you with fraud and these sorts of things. So it gets very sticky.
Are they writing in there like presumptions? If you don't report, there's a presumption, you know, against you, because they make it punitive. You know, when
they do. Well, you remember when they were going after? They had a special prosecutor, Mueller, who went after Trump for the Russia Gate thing.
Right.
They went after a guy.
Russia. Yeah.
If I say it enough, it's true. And they went after a guy, Paul. I can't remember his last name, but he was Trump's campaign manager for 3 months in the summer before he got elected. Obviously, he wasn't that good, but he was an influential guy. He was a mover and shaker. He had been
Manafort, Paul Manafort.
There you go, Manafort. They eventually indicted him. He went to prison, not because of anything he did for the Trump campaign, not because of anything he did for the Russians or the Ukrainians. They sent him to prison because he had 33 counts of FBAR violations, where he told his accountant, I have no foreign bank accounts. Turns out he had 33 foreign bank accounts in Ukraine, in Cyprus, and some other countries where he was stashing away, large, many millions here of payouts that he was getting. He never reported them. They got him on the FBAR violations, which is a massive financial penalty. Plus, they did fraud and they threw him in jail. So it was just it's a different approach to enforcement, and you've probably seen this, where they basically create penalties around you, and if you don't do it right, you get smacked with some really aggressive penalties that can send you to jail or really bankrupt you. And that's kind of the sad approach that we have in Congress these days.
No, absolutely.
We're also seeing a trend. This is just a side comment, but we're seeing a trend where the anti-money laundering laws go two ways. One is we're trying to keep dirty money from coming into the clean system, right? So we're cracking at where those coins come from. Are they dirty? All right. The flip side to that is what's called the combating financial terrorism, or financing of terrorism. So this is the process where clean money gets filtered to dirty actors, okay, bad actors. So a frequent way of doing this is you give to a charity. You give it to the Children of ISIS Foundation. Well, it goes to fund some sort of dastardly terrorism organization. Well, what we're starting to see now is they're tweaking that sort of thing for banks, and they're shutting down. Like we saw this just recently with Nigel Farage. He's made a big issue out of it. His private bank, Coots Bank, I don't know if you heard about this. They shut down his account. Now, the basis for doing that, it didn't really come out well in the news, but the basis they did that was they said he was a terrorist. He was engaging what would be considered domestic terrorism, inciting insurrection and things like this. You can kind of see this is happening in the U.S. I mean, they're taking this whole January 6th thing as insurrection. They're already starting to talk about Donald Trump was leading an insurrection. I just saw this in the press recently, a bank could easily use that as justification to shut someone's account down. And you have they don't talk to you about it ahead of time. That's part of the AML rules. There's no talking. So you just get shut down. Goodbye. Not talking.
The mere allegation and you're shut down.
The mere allegation, or just because you say things that doesn't agree with, say, the government narrative, right. You're shut down. And we're seeing this, of course, we've seen this on social media, but when you bring it to banks, it really hits home in a big way.
You could, like you said, you could bankrupt people.
You could. It's I've been trying to we've created moving my company from a sole proprietorship to a corporated entity. It's taken me 8 months to go from incorporated to get all the bank accounts open. I mean, I don't know if people appreciate that. It's very difficult, and it's difficult to create one, let alone have two. And most businesses, individuals have one bank account, maybe two. And if you get one shut down or both of them shut down, you're completely locked out of the financial system. I mean, that's a crisis. Can't pay the mortgage, can't pay the bills. I mean, you're really crushed. So this is kind of now I'm not. That's maybe I ramble a little bit because it's late on the call, but I think this is an implication of the third choke point roll down of where we have the FinCEN would crack down on the AML side. There is no clarity right now. Once the IRS or once FinCEN in the U.S. decide they're going to enforce on AML compliance on the foreign exchanges, the foreign unhosted wallets, your ledgers, things like that, put a reporting obligation back on them, then through the OECD, they copy it in every other country in the world, and it creates a very tough environment for these unregistered exchanges to operate. So, I mean, this will take a few years to play out, to be sure. But what's really exciting for me is to talk to you, John, and to watch you be a real trooper. And you're not compensated for this. I mean, you did it out of your own passion. I know you submitted an amicus brief to Judge Torres, which was influential for a lot of people, and you've been an inspiration to the entire XRP community, and I have many XRP followers, and I want to thank you on behalf of them. And I just encourage you to encourage others to rise up and to speak and to fight the battle, because this is just the first battle, and there's going to be a lot more of it. So I'm really thankful for everything you've done.
Thank you. I appreciate the kind words. Thanks for having me on, Clint. I appreciate it. It's been fun. I tell you what, next time I get that audit, I'm giving you a call.
I'll give you a free consultation. I'll see you at the next XRP Army meetup.
Yeah, for sure. All right. Thank you.
All right. Thank you, everyone, for listening to the show. Please subscribe, like to this channel, and let others know about this discussion we had. And thank you very much for listening to our show. And remember, taxes are sexy.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.